Well, good morning, everybody. We welcome you to the February edition of Coffee and Grain Markets with Dr. Sing-Ki Lee. We come to you every couple months just to take a look at the world agriculture supply and demand estimates. I'm David Marison, and I'll serve as the host and moderator for today's program. Of course, we'll be featuring Dr. Sing-Ki Lee. Just a few reminders that we are recording this, so if you want to go back and rewatch the program afterwards, you can just go to the farmoffice.osu.edu website. And as always, if you have questions along the way, just drop them in to the Q&A feature. We'll use the chat box to drop a few links to you. But during the program, if you have any questions, just drop those into the Q&A. It's great to see a great group of people on here on a Friday. It's Valentine's Day. It's a cold, gloomy day across the state of Ohio. And I don't know if that sets us up for the WASDE report that was released this past Tuesday about the gloom and just maybe just nothing that will get us excited, maybe just like today's weather. But Dr. Lee, we're going to turn it right to you just to dive into that WASDE, the February WASDE report. Did you see any significant updates, and what's the current market snapshot? So good morning, Sing-Ki. I'm going to turn it over to you. Let's look at this February WASDE.
Yeah, thanks, David, and thanks everybody for joining us. It's always nice to have this quarterly meeting on Friday. Um, as David, you mentioned, I think let me share with a little bit of busy table first. Here we go. So, well, like as David, you mentioned, like this month's report showed little change in U.S. corn and soybean numbers. So basically, we didn't see a huge excitement from the report. The only adjustments were actually a 10-cent increase in the average farm price for corn and a 10-cent decrease for soybeans. So this February WASDE was a relatively quiet one. So looking at the bigger picture, like the market started with significantly higher production and beginning stocks for both corn and soybeans, raising concerns about oversupply. So, however, like over the past few months, demand has like proven stronger than expected, and a considerable production adjustments, especially in corn last month, have especially helped balance the corn outlook. The domestic uh, the domestic demand has been stable or strong, and will likely realize the current estimates, like at least that's kind of, I think, the consensus of the market nowadays. So when you look at this table, like the blue area is all about the demand numbers. But like while I was combining all these three crops, there are some of the spaces because corn is not having crushings. Like also sometimes we don't have food in the corn and soybean like estimates, so that's why you see some of the spaces. But anyway, the key point is, as I highlighted here, the domestic use, when you look at that, like both corn, like soybean, like and even wheat, we have like pretty strong demand, mainly because both from the domestic support and also from the fairly good export progress. Speaking a little more like specific crop, like each crop, the corn production is now like 474 million bushels lower than last year, due to reduced planting and a USDA yield cut of nearly 4 bushels per acre in January, bringing it down to 179.3 bushels per acre. While still a record high, this adjustment has tightened supply and improved market fundamentals quite a bit. Soybean followed a different path. Despite strong demand and improving exports, record high supply of 4.7 billion bushels, driven by good yields and large acreage, has kept ending stock estimated to be about 10% higher than last year. As a result, the season average price has dropped from $10.80 to $10.10 over the past 3 months. We shares a little more bearish story with large beginning stock and solid production pushing supply higher. Demand has remained relatively steady in wheat, with some export improvement, but not enough to offset the supply increase. When you look at the ending stock of wheat, it is approaching like almost 800 million bushels, which is 4-year high. The season average price for wheat was adjusted down by $1.41, making it to $5.55 per bushel. So in short, corn had a bearish start, shifting to a more bullish outlook. Soybean was initially expected to have a stable balance, but turning bearish due to high stocks and export competition pressure. Wheat is continuously under the bearish trend with high supply levels nowadays. So overall, we are kind of moving into a high stock market phase, and price movements will likely depend on further demand shifts, and uh, upcoming planting decisions. So given these numbers, probably it might be interesting to see like what was actually the future market reaction to the WASP report. So let me briefly show like what's happened in the futures market. Here, like this chart is actually showing the 30-minute interval price movement for the March corn futures contract. The red and blue bars indicate trading volume, which is corresponding to the left y-axis, while the candlestick chart like represents price movement, which is corresponding to the right y-axis. White candles indicate price increases, while black candles indicate decreases. So, like when you look at this graph, immediately after the WASD report release, like marked by the spike in red like volume bar, the market reacted with a modest, almost 5 cents drop. This wasn't a dramatic shock, but kind of suggested mild disappointment in the market, likely due to a lack of bullish surprises, also like ongoing market risks. So those are kind of all mixed and kind of made market disappointed after the release of the report. Another key observation here is this unusual like trading volume on Wednesday morning um, following the WASD release. So during this period, corn prices rebounded by about 10 cents, nearly recovering to pre-WASD levels. This movement actually was largely driven by the January CPI report, which showed inflation about 0.5% above expectations. So in response, many stock investors shifted from equities to commodities as an inflation hedge, boosting corn prices. When you just move on to the soybean side, similar to corn, the March soybean futures market reacted negatively to the WASP report. However, unlike corn, soybean prices did not recover following the release of the inflation data. In fact, price declined further on Wednesday. Um, kind of this continued drop, I think, in my opinion, was primarily driven by two key factors. One is weather improvement news in Argentina, which are expected to support better crop conditions, so kind of signaling tougher export competition for the next couple of months. Also, the second one is growing expectations of a record soybean harvest in Brazil, kind of adding like further pressure on global supply estimates. So given this outlook, many analysts predict that soybean futures will trade within a range of $10.10 to $10.80 over the next few weeks. I think that the choppy price movement will continue until the market gains clarity on trade policies and the full impact of Brazil's new crop on the US exports. Quickly looking at the wheat side, the wheat futures reaction, uh, we see pretty similar pattern to soybeans as the market recognizes the the wheat market is entering an upcycle in stocks. The kind of bearish sentiments seems to be growing. That's kind of the overall assessment of this situation. So I think that was a very quick overview of the grain market outlook and the reaction of the WASD report this week. I think maybe that was and answer
Yes,
question.
yeah, Sinki, I want to get to some of the things when we get to the exports and trade policies, but I kind of hear in your voice here, we last met in December, but it seems like this WASDE has the outlook's evolved a little over the past 3 months. Do you have anything to say about that? It's kind of about how has the WASDE kind of we looked over the last 3 months, so maybe look back before we look forward on some of the trade issues, but seems like there's some things going on there.
Right. Probably some of you already realize that kind of my tone and kind of interpretation of market like has kind of changed and evolved a little bit. And that was kind of actually we had many things happen during the past 3 months. So kind of like compared to when our coffee and gray meeting in December, I think things has changed. So let me share a little bit about like what's happened in WASD and how kind of month to month like USDA's view has changed during the past few months. So uh, probably the key information to assess how USDA's outlook has changed over time is its perspective on stocks and prices. So I know this figure is not like pretty or straightforward. So let me walk you through it. The figure shows the relationship between the stocks to use ratio and the average farm price based on historical data from the past 15 years. Specifically, the brown dots represent market years from the recent 4 years. So basically, after COVID, the data points are colored in brown. Uh, and and also, like the red and pink dots indicate USDA's monthly estimate for this market year from November through February. So over the past 3 months, this is kind of the pathway that kind of USDA shifted its estimates like across the month. The stocks to use ratio has decreased from 12.9% to 10.2%, indicating a reduction in excess supply. At the same time, the price has increased from $4.10 to $4.35, reflecting a bullish shift in corn fundamentals. Several factors contributed to this change, like both domestic demand and export have remained stable and strong. And I think more critically, the substantial yield cut in January from 183 to 179 bushels per acre made USDA to significantly revise its outlook. So um, sometimes I think futures and options market positions can signal the direction of USDA's outlook. So I actually brought this. This chart shows the managed money net position in the corn futures and options market. So if the line is above zero, it means the majority of market positions are long, indicating the more like traders are willing to buy rather than sell. So looking at the black line, like representing the 24-25 market year, we can see that the net position turned positive in early November and has continued to rise. This implies that strong fundamentals in the corn market like is expected to persist at least in the short run. So that's kind of how we can see. And maybe I think it looks like market moved first and then USDA actually kind of adopted their view and finally revised all the projection numbers during the past 3 months. Let's take a look at like what's happened in the soybean side. Um, let me, yep, here we go. So when looking at the soybean side, USDA adjusted the stocks used ratio from 10.8% to 8.7%. At the same time, the price has decreased by 70 cents from $10.80 to $10.10. It is a bit unusual to see while the stocks use ratio went down, but the price was also going down. So I would interpret this observation as global soybean discounts. The soybean market, I think, operated as before, so it was not really kind of like cranky situation in the market, uh, but globally, like we expect about 9.5% higher ending stocks at the end of this market year, primarily due to the massive supply in the US and Brazil. Maybe a silver lining news from the WASDE report in soybeans was the global ending stock was slightly adjusted down by Argentina's drought in this February reports. So like when looking at the net position chart again, the soybean futures and options traders already switched their positions to long in January, presumably because of the ongoing weather issue in Argentina and southern Brazil. This trend has continued into this month. However, it's still a weak signal to determine whether the soybean market will turn bullish. My hunch is that uh, the net position index won't move dramatically in either direction, but will likely hover around the current range near zero, because Brazil's production still has a good likelihood to be realized as predicted, and the possibility that Brazilian soybeans will severely deter U.S. exports is already taken into account in the current market. So kind of, there's somewhat like an upward pressure and downward pressures are coexisting in the market. So that's why I think probably the market will not move very dramatically in the soybean side. In the case of wheat market, the USDA hasn't changed its view much over the past 3 months, actually. However, let me reiterate that like the wheat market is entering a high stock phase as shown by this market trajectory over the past 4 years. So like this. So kind of despite the many like black swans like since COVID, one consistent pattern here is that the stock's use ratio has been continuously increasing while like prices have been decreasing since 2022. Kind of this suggests that wheat fundamentals are likely to remain weak for the next few months or even a year. When you look at the trader's net position, the net position index has remained in a net short throughout this market year. And in fact, it has been the negative range for the past 3 market years. This actually tells a consistent bearish story about the wheat market. So maybe a strong market rally in wheat seems unlikely in the short run. That's kind of what we can interpret from the like kind of revisions and updates from the USDA's month-to-month views.
So I'm hearing a bull might be in the corn market. From what we've looked at the past 3 months, we've gone more bullish, but the bear continues to sniff around the soybean market and definitely in the wheat market. We're looking at the bearish signals. Is
Yeah.
that a good summary in my mind, Sinky?
Yes, exactly. Yeah.
So do you want to bounce ahead now to talk about trade and exports?
Yeah,
Um,
let me
well, I don't even know what question to ask you when it comes to exports and trade and what you're thinking there of impact of where we're going. A lot of movement out there in the political sphere, and didn't know if I know you and Ian Sheldon have probably daily conversations about what trade policy is doing to the markets. So, what are your thoughts on that, Sinky?
so yeah, let me kind of turn this like slide. So
Okay,
yeah, can you see this? Yeah,
absolutely. Yep.
yeah. So like I think as especially corn and soybeans are like really like like kind of taking this like shock like a little more severely. Like let me just focus on these two commodities in this discussion. So as export and trade policies are kind of inextricable, um, let me like briefly cover the export situation first, and like let me try to connect it with potential trade policy interventions, which is still like I think pretty much in the cloud. For the interest of time, of course, I'm just narrowing down to corn and soybeans only. Um,
Mhm.
the I think there are two big uncertainties here. At least like kind of that's my like 2 cents. The tariffs and South American production issue. So as shown in the last figure, we have seen very strong corn export progress and are on the track of for the second actually highest corn export in the U.S. history. However, when we look at the soybean exports, we've started like losing momentum in recent weeks. This is because like foreign buyers have begun deferring their orders uh, because they are confident that South American soybeans will come to market without major issues. Currently, the biggest corn and wheat buyer is Mexico, and China is the largest soybean buyer. Mexico is also the third largest U.S. soybean importer. Uh, while like it's too early to make any predictions, the trade dispute with certain countries will be especially important, of course. And I think yesterday, like I think President Trump announced a reciprocal like tariff strategy. So probably we will need to like closely monitor how this develops because I think if it is like not too aggressive, then things actually can be not as bad as what we are like concerned. But of course, this kind of tariff is not really like one-way direction. But if once we put the tariff, then like the partner can actually put the retaliatory tariff, but it's sometimes just like agriculture has been a pawn in this kind of trade chess game. So that's why we are always nervous of when it comes to this kind of trade uh, policy, like the conversation. So I think it is, I don't want to make any like kind of speculation or like prediction because I think it is too early to see how the direction and tariff strategy will be like eventually set in stone. So probably just what we can see is I think still like at least for this market year, the corn export will likely achieve this fairly good number. That's kind of my prediction. Uh, but also like soybean side, I think USDA has pretty realistic target or kind of estimate, which is just 1.8 billion bushels. So as you can see in this right figure, almost we are not really actually expecting much to be exported for the next like 3 to 4 months. So that's kind of actually the reflection of the concern of upcoming competition with South American crops, but also probably some of this like trade policy uncertainty will eventually like play some role, I think. Let me like talk a little more about actually the South American production. Uh, so Brazil basically planted soybeans in a record high area, which leads to a record high production. The 47.4 million hectares here, which is actually equivalent to 117 million acres. In the US, we also planted a lot of soybeans last year, but it was 87 million acres, which is only 74% of Brazil's soybean acreage. So when looking at the change from last year, we see all the supply numbers, area, yield, production are higher in Brazil. Uh, the CONAB, the Brazilian National Company for Agriculture, slightly lowered its soybean production estimate to 166 million metric tons, mainly due to drought in southern Brazil, particularly in Rio Grande do Sul. However, a record high soybean production is still likely. Similarly, Brazilian corn was negatively impacted by the sudden drought, but a large supply is still like expected. So kind of Brazil seems like at least got some damage from the recent like southern region drought, but it looks like it is not really like hugely changing the numbers of their final production estimates. When we think about Argentina, actually Argentina took a considerable damage from heat and drought recently, and its soybean production estimate has been lowered by 6%, And corn production is also estimated to be 2% lower compared to last month. So basically, when you look at the kind of global corn and soybean market balance, this update in Argentina was actually the main reason that we see a little bit of adjustment in the supply side. So overall, as I mentioned, in the December like coffee and grain competition with Brazil will be the key. Um, we still don't know like what export competition and trade policies will bring or how they will affect the next market year. So I think it's important to stay aware of their potential impact, but I also want to emphasize that we shouldn't like panic or be terrified. Instead, I think we should focus on finding the best response, like given the market circumstances.
It's hard not to panic when I see 10.5% change year over year in Brazilian soybean production, though. I can see why the market is where it's at. Now, Sinki, we don't have much time left, but given the current market situation, what are some key takeaways that Ohio farmers should be thinking about? Our next coffee and grains is going to be a couple months down the road in May. So, what are some strategies we should be thinking about from here on Valentine's Day till in May when we're well into our planting season? So, what are your thoughts on that marketing strategy wise?
Yeah, let me like I think so this is kind of actually my last figure. So this figure is showing actually the Northwest Ohio cash prices. Uh, and in fact, I could see most cash markets in Ohio follow a similar pattern to this. So largely like Ohio cash market kind of reflects the trend shift in the national market, but with a relatively strong basis compared to other Corn Belt states. Right now, corn price is increasing while soybean price is just above $10 per bushel. So given the discussion we had this morning, maybe there are like two takeaways from me. First, very classic lesson, stay informed and be ready to lock in good sales opportunity. It might sound like old school advice, but as they say, old is gold. With today's market uncertainty, yeah, this approach remains reliable. The fundamentals aren't in a terrible shape. I think the current market status is not really unusual situation at least, but there are like risks that could affect like farm profitability and margins in the month or even years ahead. So prices are like currently fluctuating, driven by a mix of uncertainties. So I think good opportunities may be short-lived, but are likely to come and go very quickly. So maybe a good starting point could be building a marketing plan that gives contingent strategies for your farm. And my second takeaway is like farmers should be cognizant of potential bargaining power before planting. So while like one farm's planting decision uh, is not gonna shake the market, but it's still valuable information for local buyers who they partner with. So farmers should recognize that they have an advantage at this stage, which will not last once planting is done. So being mindful of this short window could lead to a better early sales opportunities. Um, I think that's kind of my 2 cents about like the current very uncertain market circumstances. Probably maybe we will like talk more like in May, and we can also maybe project next market year a little more like detailed way in the second quarter of this coffee and grain talk, I think. So yeah.
Yeah, and I think Sinki, you say it true, and I know you guys teach it in your grain marketing workshops about the basic fundamentals of having those knowing those cost of productions, having a grain marketing strategy, and don't fall asleep at the wheel here. And just make sure you're monitoring. I know daily I'm on checking just to see geopolitically what are some things that are happening out there and how that might move the market just over the next couple days. And I think that's great advice saying some of the movements could be very short-lived. So make sure that you're taking the opportunity to check in often. And in the old baseball terms, be ready to hit a lot of singles this year. You're not going to be hitting home runs. Maybe a squeeze bunt or some of those kind of things might be in play for this year. So, Sinki, well, we really, really appreciate it. It always seems like this half hour goes really quick. But I will mention to everybody that if you go to the farmoffice.osu.edu website, I put the link in there before as far as where you could go see those previous recordings. We'll be putting this recording up here today, so you can go back and watch that. Sinki will put your slides up there as well. That way folks can jump in. Also know that we have a quick evaluation that we'll send you. It's great to see the numbers that are on here today participating here early on the Valentine's Day. Sinki, happy Valentine's Day to you. I hope for us it just turned into a good market year for all of us. So thanks everyone for being on. Sinki, thank you very much for all that you do. Wait, we do have but before we end, we have one question.
Oh yeah.
Okay, so I forgot to say that as a farmer, we used to hear market news about Ukraine, and now we hear nothing. And Ukraine used to be a market mover. I'm especially probably thinking on that wheat side. Now it seems like it's not a market move at all. Little production should help the markets wanted it. Does that make sense? Ukraine used to be a market mover. Now it seems like it's not a market mover at all. Little production should help the markets wanted it. So any thoughts on the Ukraine situation? It looks like we might be getting some resolution there too. So
Yeah, actually, that's a very like good point. I think Ukraine like situation like still I think partially affecting our market circumstances because when you look at the export numbers, it is actually better than like what we had before. So kind of historically, like we are like making pretty good export wheat export. So wheat market is still, I think, getting some like indirect benefit from the Ukraine situation. But I think the problem here is I actually had some of the slides about the grain stocks, and actually when you look at the grain stocks, um, the the issue is like wheat grain stock actually we had about close to like 1 billion bushels of grain stocks before pandemic, and then it just like dropped to almost half of it. So that's why the tight stock really supported the wheat fundamentals for a while. And also on top of that, the war in Ukraine actually kind of like really like burned the market, and the market was very hot. Then later on, now we are kind of really like seeing kind of a couple of years with good harvest, really like kind of making the stock level higher and higher. So now we are kind of reaching close to where we were right before the pandemic. So that's why kind of nowadays the situation is kind of upward and downward risks are coexisting. And also but the wheat demand is pretty inelastic. So like once this supply cycle is just like determined in one direction, like up cycle or downward cycle, then usually market is kind of taking that and reflect it as its like market sentiment. So that's why I think we are not seeing very like huge excitements that can like turn this market sentiments down the road in the wheat market.
excellent, excellent. Well, Sinki, as always, we appreciate you. We thank you for getting on, giving your insights, some reactions to the WASDE report. And as always, just thank you. And so, just a reminder, the next coffee and grain marketing talk with Sinki is going to be on May 16th. If you're registered, you're going to just get the automatic invite to that program. So again, thank you. Everybody have a great weekend across the state of Ohio, and we'll see you down the road. Thank you.
Thank you, everybody.